Hey everybody, we are coming at you from Malibu, California. You can see the distant lights of Santa Monica in the background. You might also be able to see these waves coming in. The waves are much like the market. Even though there's ample time for each wave to arrive at shore, there's always another one behind it. The old saying goes, time and tide waits for no man, and neither does the market. So basically, a few weeks ago, I put out a short video saying that we thought the market's top might be in. I mean, Apple was already hitting 400 something, and sure, it went to 500. It went over 500. It split with all the new Robinhood users, all the inexperienced non-algorithmic traders in the market. This is something that the actual market, that Wall Street sort of preys upon. When I was first training under John Person, he told us flat out. He said, hey, look, you know, it's 80% inside money. He said, hey, look, it's 20% inside money and 80% retail money. And that 80% retail money through all these mutual funds and everything else that's who we have to sell to. So they were like, hey, don't rag on them too much. Don't call them dumb money or retail traders too much, because the 80% of the market, that's who we have to sell to. So when everybody is piling into Apple, piling into Tesla, when the thing is already skyrocketed asymptotically, just because it's going to split, Apple split 4-1, Tesla split 5-1. Look at Tesla today. It went to $350. You know, times 5, that's a little over $1,500. So yes, it was at $2,200 a share, and it's back down to about $1,500 a share. This is all due to market manipulation, some of the new money that's been in the market through these mobile apps like Robinhood. But like you can see, these waves keep coming. These are investment opportunities. The cars you hear behind me on PCH, PCH is right behind us. Those cars are trading opportunities. We look at waves as investment opportunities, meaning longer than just a day trade, longer than just a quick skim on the market, just a quick vig, you know? Here, look, we've got plenty of waves coming in here, and they're coming in fast. So we have gone down to the bottom of the market. The nadir of the market came in 11 years, almost to the day. I mean, if you look at 2009, March 17th, right around that time, Visa was going public. Why? Because they knew the stock, markets are at the bottom. If you go public at the bottom of the market and everything kind of rises, it's like the tide, man. The tide will rise all boats, no matter how large. So if you look at March 15th, March 17th, 2009, if you add 11 years, just like John Person said, I didn't believe him. And he was sitting there, and I took his courses in 2008, 2009, and he was talking about how every 11 years, not 10 years, but every 11 years it's called the 11-year cycle. So we looked at March 2020. If you just do basic kindergarten math and you go to 2009 plus 11 is 2020. March 2009, add 11 years. You get to March 2020. And that's exactly what happened. The market was at its all-time low, or its recent, its most recent low. And it rebounded in a V-shaped pattern because of all this computer trading. Remember, 10 years ago, we weren't as advanced as we were, meaning Wall Street. I mean, the Wall Street computers, the AI, and more so the algorithms. Everyone talks about AI, and AI is great because it's learning, machine learning is great. But it's really just the algorithms. So instead of having a bunch of traders there, you just have a program that goes out into 100 markets. It looks at the NVIDIA options. It looks at the Apple options. It looks at the Tesla options. And it makes trades just like a trader would. But there's also a lot of nefarious trader bots, and that's one thing I learned about the Hunter algorithms that basically hunt for bid and ask. They're hunter algorithms, just like this dog is a hunter. So when you see a hunter, it's looking for something, it's smelling, right? So just like a dog that's hunting for a fox or a rat, hunter algorithms will hunt bids and offers or bids and asks, and they'll make it, they'll try to waterfall it or make it roll over by continually upping the bid and ask as you put your orders in. So Wall Street has many, many, many advantages over us. But the main thing we can do is recognize that all of that money is traded by computer, right? So what does that mean? That means it's programmed. Yes, it's rigged. People say, oh, the market's rigged. No shit. It's not so much of an insider trading. That's illegal, the SEC. I mean, I'm sure, there's still things that go on. But basically, what the big secret that nobody's telling anyone, you'll never see it on your brokerage account. You're not going to get these levels on Robinhood. You're not going to get them on E-Trade, Ameritrade, Scottrade, whatever trade, because they can't. It's illegal for them to give you signals that'll, and it's also liability exposure for them to give you signals like, hey, the market's at an all-time high, time to sell. They're never going to tell you to sell. You ever see Wolf of Wall Street? Matthew McConaughey's character, it's pixie dust. They want to keep your money in the account. We always do account rotation. I don't care how much tax I have to pay. We'll get that money out of Apple. We'll get that money out of Tesla. Come on already. I mean, look at the RSI. The RSI is signaling overbought, and then it comes down, and then overbought. And it just keeps going higher and higher and higher. And the mainstream media financial news is ready to just say, even this morning, I remember looking at the news before the market opened. Oh yeah, don't expect this. Some I think it might have been Goldman Sachs. Some trading entity or analyst came out and said, oh, this bubble's about to burst, but don't expect it to burst anytime soon. Let me tell you something, pal. It already burst. August 31st, led by Apple and Tesla. Everyone poured into the markets like a stock split was something special, like it was going to give you more equity. People don't realize that. I mean, look at my previous stock split video. Okay, it's just 100 shares that at $1,000 a share is $100,000. Okay, so stock splits and you get, $250 a share at 400 shares. That's still $100,000. So nobody is going to gain by a stock split except for Wall Street. Why? Because they lure you into the deep end of the pool. Even a good friend of mine, she just said, oh, well, I got Robinhood and I got some free stock and I bought something on Robinhood. I figured out how to buy something and it went down money. I lost money. Right, because you're not buying at the right time. You're not simulating your position with options or protecting your position with options. So we're just here to tell you that there's a lot coming, just like these waves that keep rolling in. There's new investment opportunities every day. We advise everyone to wait until after the election, really until January, February, March, again, to really sort of buy something. Spartacus, no. He was about to go off the deep end. Get up here. Come on, guys. No playing on the rocks. You play on the rocks, that's like bad risk management. Damn, there is a lot of wave activity. It's too bad we don't have a better camera. This is being shot with a Samsung Galaxy Note 4, I believe. We just came out to Malibu to get out of the house, get out of LA for a little bit, drive up the coast, smell some of that ocean air. It's funny, I was born and raised near the ocean in New York, and when I decided to come to California, I settled near the ocean. Anyway, like I've said in every other video, any portfolio can be protected by putting stops in, by buying puts on your positions. Remember to just even up the deltas. If you have 100 shares of stock, that's 100 deltas, and you have to find something that's two 50-50 deltas puts to get that hedged, essentially. So remember, you can also sell covered calls to make a little bit of money on your portfolio. That would have been actually pretty good in this environment, as Apple careened if you bought puts and sold covered calls, I mean, I was just talking to a buddy of mine from MIT who, has a nice portfolio. He's built up. He's got a family, and he's a CFO. And we looked at his portfolio. He had everything clocked. I mean, you can't get anything past these guys. I mean, he already had I was going to help him out and do a spreadsheet. Most of my friends don't have the advanced MBA knowledge or the advanced financial training. He had a spreadsheet that, literally had every position, 1,000 shares of stock in this. Okay, that's 10, puts or whatever. So he was basically set. But the important thing is that we were actually talking about this about 2 weeks ago. Every third Thursday of the month, our MIT buddies get on the horn. We get on that Zoom call. Spartacus, be careful. Yeah, we get on that Zoom call, and it's really been great because a lot of us live in different states. We're all over the place now. So, but we have a good 8 or 10 MIT guys that we still stay in touch throughout the years, regardless of our position, different projects. And we were just talking about hey, hey, what if this thing tanks? What if this market, nothing? It just seems that it's irrational exuberance all over again, right? The markets just go up and up and up and up and up and up and up, and then one day you get hit by a gasoline tanker, and the market sells off. Well, like I said, we were just talking about this, so it's a good thing to get together with your friends, create like an investment club, whatever you want to call it, a Zoom meeting, whatever. Just communicate about your positions, and don't take anything for granted. Markets are treacherous. Wall Street is here to make money off you, not to make money for you. It's another thing I learned in my training. All right, well, it's been great talking to you guys. It's about 11 p.m. California time here in Malibu. Watch those positions. Anyone who's looking at the markets today, Tuesday, September 8th, anyone who was looking at those markets saw that there was just, yes, the gaps closed on Amazon, and Tesla came up a little bit. Apple's gap closed. It went up to almost 119 or so. But there's no real strength in the market. And all the insiders know that if you have an LLC hedge fund and you're worth $1 billion and you just made 200 billion or whatever on Apple and you get 20% of that, you're going to be selling. So LLC, LP hedge funds are all going to be unwinding positions starting at the latest in October. If me and you owned a $10 billion position in Apple, we can't just sell it tomorrow. It takes weeks to unwind these positions. So what we're going to see is an unwinding and a sector rotation. Yes, we might see Macy's get clobbered, and then all of a sudden go from 7 to 8, so that the stock people can make a 10% in a day, and the options people can double their money in a day. These trades will be going on. These investments will keep going on all day long, just like these waves that are coming in. It's nighttime. Most people are asleep. They're not paying attention to these waves. These waves are trading opportunities. That's one of the reasons I built AI Deep Trader, so that we can go out into the market, reach into the future. Remember, a lot of these indicators, the MACD, even to some extent RSI and slow stochastics, which we use a lot. Remember, a lot of these indicators are behind. They're reverse looking. They're historical data. There's a reason it's called historical data. Yeah. Could anyone have predicted the coronavirus? No. We thought the market sell-off would be triggered by the Soleimani event. Clearly, the whacking of an Iranian general could maybe start a war. Everyone get nervous. Market tumbles into March. That wasn't it at all. I mean, I don't know how many people die each year of cigarette smoking. It's probably like 500,000. I think 80,000 people a year die of the flu. So this virus was maybe unforeseen, maybe not. But the point is, we have an incredible opportunity the markets that are on all-time highs, the price to earnings, the PE ratio of the S&P and the Nasdaq especially is unbelievable. Go look at the P&E of Tesla. Okay, even Apple. Okay, if Apple has a high P&E at 35, look at the P&E of Tesla. Get back to me. Seriously. So anyway, I just wanted to have a ramble, free thought as we secure we've secured our new podcast location. We're pretty excited about it. We have 3 locations really. One is a home studio, and one is a office studio, and then the third podcast studio is actually going to be mobile. So as a filmmaker and trained in filmmaking and all that stuff in college, and I came out to Los Angeles to be an editor and all, be in the filmmaking business, and I got into the video game business, which became very similar. We basically look for a few things, and that's what we've got here. So anyway, I don't want to keep going. Let's have a good night. Remember to protect those positions, ladies and gentlemen. Protect those positions. We will be doing mobile podcasts. Like I said, we have 3: home studio, office studio, and a mobile podcast, so we could literally just go out into the jungles of Costa Rica and do a podcast live. All right, everybody, have a good night. Hope you had a great Labor Day weekend. And remember, this market is going to get treacherous, so don't invest too much of your money until February or March 2021. All right, good luck. Stay safe out there.